Hi there, welcome to the closing bell on the 10th of December. I've recorded this on the 9th, of course, on the Friday. And look, we're starting to get the signs of a bit of a correction forming. And a couple of weeks ago, I said, beware the bull trap. I gave you a range in the markets, in the ASX especially, where I thought a reversal could start to take shape. So I wanted to update you on that and give you a sense of how things are looking. We're heading towards the FOMC, of course, next week with the rate rise decision there. I think everyone expecting a 50 basis point rise, and really the commentary coming out of the Fed after that will be important. All eyes on, the pace of increases from here on out. People starting to get a bit bullish that they're going to slow down. So really, they are going to decide whether we have a Santa rally or not. So I guess this is the moment when I could get things completely wrong. If I say that, we've got the correction starting in our market, but the S&P doesn't follow through, and next week the Fed sparks a big Santa rally from their commentary, well, you've got to just accept that. And we'll see how it pans out, I guess. So a bit of patience, waiting for the FOMC might be the way to go before hitting the sell button if you're thinking about lowering exposure. I guess if they do spark a sell-off, it could be the beginning of a much larger correction. So you want to have your ears pricked up over the next week heading into that. So let's jump to the charts, and I'll show you an updated version of what's happening in that ASX 200. So here we have the futures on the ASX 200. We've been following this quite closely. Obviously, the 2020 crash. There's your recovery wave going to all-time highs there. So that's a major wave we're looking at. But we've also got the correction that's been going on, don't we? And this is the thing that I'm interested in sort of showing you, just to give you a sense of how these things develop and why I use, the ratios I show you on the Fibonacci's, the buy and sell zones, that sort of thing. I think it'll be a good little lesson on this. So if we look at this and consider it, even though, prices have, managed to head above that high, but just imagine it as these waves that come nearly all the way back, shaking people out. And prices are sort of heading down from a long-term perspective. If you're thinking of the development of a downtrend, and it can be, this is just how it forms, and this is how everyone gets fooled, because I can tell you, as things develop, people are getting bearish here, they're getting bullish here, they're getting bearish here, they're getting bullish here. And the market has an amazing propensity to shake everyone out of their positions, change their view from bullish to bearish at exactly the wrong time, and then carry on its merry way. And everyone is great at figuring things out in retrospect, but it's trading in real time that really sorts you out. So, looking at this, I just want you to get that sense of the way that I look at these waves, each of them as they develop. And I'm looking at this initial correction, that I'm interested in, the zones, the buy and sell zones, as areas where reversals often happen, and then prices head back to the point of control. So once that range gets set up, you can see it rallies to the upside. Where does it get to? Up into that sell zone, gets hit, goes down into the buy zone, back to the sell zone, back to the buy zone. So you see these oscillations start to get set up. And you might not have been able to see that properly, but I'll just do it again. This oscillation that gets set up once a range is developed, that can go between that buy and sell zone for starters, just constantly going back to the point of control. And if it's going down, you'll find that waiting for selling opportunities up in that sell zone is what you're really looking for, where prices will turn back down and potentially have another wave to the downside if it really is going to sell off. So if you're following along, looking at these things, and you know how they develop, you're then looking at that wave again, and we look at this one, how did it develop? And you start to get a sense of the waves occurring, movement back to the point of control, back down to the buy zone area. That's where everyone gets really bearish, starts getting short, thinking that the low is going to crack. It doesn't. Turns around, back to the point of control again. Then a big rally. And this one did go all the way. It did actually take out that high. So this is where I'm saying you're waiting for the reversal signal before you trade. Because if you just go blindly in that sell zone every time, I mean, that's not going to work out very well for you. You would have had nearly a month of trading going against you before things went your way, and you probably would have been stopped out. So you're waiting for signs of things actually turning down, and you'll see here with this bar that there is your sell pivot, which is the first sign, and you're waiting for that before you're going to act. And that's and the sell pivot, of course, weekly close below the low of the highest price candle in the move. So, you know, as you follow it along, then you're preparing yourself for how is this thing going to evolve. If I'm bearish, I think it's going down. The size of the short squeezes are immense. They go on for longer than you think. They usually turn people bullish before they're ready to turn down again. And you're tracing out these areas, saying, well, where is the area where I'm waiting to see some selling pressure come out of the woodwork? So that was 2 weeks ago when prices were here that I spoke to you and I gave you this range, this area where I thought this is where you want to be wary of the bull trap. You want to be wary that things could actually start to turn down from this zone. And we have seen that so far. Today, I don't know where it's going to settle by the end of the day, but if the futures settle below 72.12 in the ASX 200 futures, and we're at 71.96 currently, that will create the weekly sell pivot, which will be a little bit of a starting gun for me for potentially more downside, and I can turn sort of short-term bearish. And because it's in a sort of major sell zone of a pretty major wave within this whole move over the last few years, even though it's been terribly difficult and it feels like it's just gone nowhere, and it hasn't for quite a long time, but it is still tracing out. It is still showing weakness. So this could be quite an interesting development for more downside from here. And at least, and what you're saying is, what are the odds that it will go and retest the point of control? And you'd say the odds of that are pretty good. So you're looking at this saying, well, the odds are pretty good that it will test that midpoint, and that will give you a chance to ride a trade, take part profit, create a free option, and then see what is coming next. Or, you know, just to be wary of being too long here, having too much exposure. So also remember, I've told you that the move to the downside also is tracing out an ABC formation. So we have the initial wave to the downside, then we have that A leg, the B leg down, which doesn't go below A, and then the C leg here. And if we then have overlap, that's when you're looking at the potential for the extension to the downside of this initial wave here. So it's not quite there yet. That will be, below that high, which was around 70.45, 70.50. That's only 150 points below where we are now. We could open there on Monday. Who knows? So there's a few dominoes, and this is what I like to see often is you have this initial setup for the aggressive trader looking interesting. I then have levels, which I can't tell you about where to get in exactly. And then there's the next dominoes lined up. So if we do get the weakness, it hits that level, and then we get the failure, through the point of control, and the selling picks up, that's when things can go rapidly. So it is setting itself up quite nicely. And again, this is where I can end up with egg on the face. If the Fed then, if we have this weekly sell pivot created, the Fed comes out and says, oh, we're nearly done raising rates now. Well, the short-term technical situation will be overridden by the Fed, won't it? And all of a sudden, it's off to the races. And look, it breaks out above the all-time high. I'm happy to, change my tune on how the markets are looking. And probably the long-term trend will start to turn up. But in the short term, just looking at this, thinking about the very long-term picture of how this is looking on that monthly basis, saying that there's that old high from 2007, major level, doing lots of work around that. We've got this old high, the initial sell-off coming back to the sell zone. This is when you're looking at, wow, that could evolve into something quite big, especially with growth coming off at a rate of knots. And you're thinking about that long, really long-term sort of linear regression type of feeling of what the market's doing. It's going to be good buying down there if we do end up having a big sell-off next year. That's the spot where you make your big money down the track, if you're buying the move from that zone. So that's sort of how I see things in that ASX 200. But the S&P 500 isn't quite there yet. It's on the edge. If it has a bad night on Friday night, and you'll know more than me, it could set off the chain reaction of creating the weekly sell pivot. If we're looking at this downtrend that we've got going, and we're saying, yes, this downtrend is intact because it's remaining below the lowest high in that trend. So there's a continuation could happen. The weekly trend is actually still down. And here's your highest price. Really, it's right around where those moving averages are, is where the low of that last week's range is. So down below that sort of, there's 39.36 is the 10-week moving average. So, a weekly close below 39.36, for example, creating the weekly sell pivot, which is also in line with what the sell zone is of this most recent down wave. There's the sell zone there. It got within a few points. So everything's set up there to potentially be a continuation to the downside of this overall downtrend that we're in. So it looks almost too classic, but you've just got to go with the signals and let them play out. But if prices don't create that weekly sell pivot, and let's say we have a rally tonight, so there's no weekly sell pivot yet, and really it's on the edge of switching into a weekly uptrend as well, and then the Fed comes out and says, oh, we're nearly done, and they spark a rally which switches this, all of a sudden the Santa rally could be on, and a big squeeze could occur, break out above that high, and then I'll be looking at the sell zone of the whole structure as the next real resistance area. And from there, next year, things could then roll over and still be heading lower. So that's how it is. It's a complex situation, but let's see how the US went on Friday night and how it plays out next week with that FOMC. So, it's going to be an interesting week next week. It's been pretty dull up to this point. I'm happy to see this year finish, quite frankly. It's very tough going out there. But yes, that gives you a bit of an oversight of how I look at things, and let's see how things play out next week. All right, cheers. I'll come back with more next week.